Hello, beautiful people, and welcome to another brand new edition of the ITU Forex class. In this week's episode, we're actually going to be talking about a couple of end of year trading tips, which are going to be you're going to find very helpful, especially as you go about planning for your next year, your trading year that is, and also reviewing how your past year went. Okay, so we're going to be talking about a couple of tips that you're going to find very useful. So without any further ado, let's get right into it. Okay, so first things first, why do you need to make an end of year review of your trading performance? The reason behind this is pretty simple. Okay, professional traders believe in tracking everything they do because the idea is, or the logic behind it is that if you don't track something, if you don't measure it, then you cannot improve upon it. Okay, and so the difference, the defining distinction between traders who are struggling and traders who do this for a living is that not only do they track everything they do, but they take time also to review what they've tracked. Okay, so that gives them the opportunity to be able to improve upon areas where they are lacking or they are underperforming, and also kind of review where they are making mistakes and plan not to do that, not to continue doing that. Okay, because the definition of insanity is doing the same thing over and over again and expecting a different result. So for example, let's assume that one thing that really spoils your trading performance or your trading results is whenever you get into a losing streak, for example, instead of you just following the plan and trading with a strategy that you've backtested and proven to work over a number of trades, you easily just get into your emotions and you start revenge trading, for example. Now, if you don't track your performance or if you don't keep a detailed journal of your trading performance, then mistakes like this can go unnoticed. And so when you get into a losing streak, you get into the habit of revenge trading. And so that revenge trading might either cause you to even get deeper into drawdown, and eventually you might be losing money left, right, center, and you don't even know why. But if you're tracking and you're keeping a trading journal of this, then when you do this like once, twice, or three times, then eventually it's going to become obvious for you. And so now when you're reviewing your trading performance, you would know that obviously where you're having the most issues, for example, in this case, is with revenge trading. And so when you're in a losing streak or whatever the case might be, you would definitely have your attention very heightened with regards to you performing in such a way that you're not going to compromise your trading performance by revenge trading. Okay, but if you don't track your performance, you're not going to know all of this data. And the thing is, inexperienced traders who are struggling to become profitable, one of the biggest mistakes they make is they just go about trading. When they see a chart or price moving, they get emotional. They don't even have a trading strategy. Obviously, you know that by now. And they just place a trade and they just trade purely based on gut feel and emotions. They don't track their performance. They don't journal their trades. They don't do any of these things. While professionals treat trading like a business, they do each and every one of these things. Okay? And so most inexperienced traders, they just trade anyhow and they don't review anything about their trading performance. They don't reflect on their performance or look at their numbers to see what needs improvement so that they can improve upon that particular aspect of their trading, and what needs to be what needs to be catered for so that they can actually do that when the opportunity arises. Okay, and so one of the distinguishing factors is that inexperienced traders, they just move on without reflecting, while experienced traders, not only do they reflect, they track every single thing they do because they believe what you cannot track or what you cannot measure cannot get improved. The second thing is, profitable traders don't just track, like I keep telling you now. They don't just track what they're doing, but they take time to review their performance. And so they like to see what it is that they're doing that is making them underperform, for example. Okay, so let's assume you have a trading strategy that you've backtested, and you've proven that trading strategy, even though past performance obviously doesn't guarantee future results, but with the wealth of data that you've had in the past, that trading strategy has promising results. Okay, now there's one thing you can do. You can adopt that trading strategy and just trade it without keeping track of anything. and hope that it manifests well. There's a couple of flaws to this, because if you just go about trading with that particular trading strategy that you've proven that it was profitable in the past, if you don't track your trading performance, you don't review your analytics, you don't do any of those things, you just trade, okay, you have to be 100% disciplined for you to follow each and every single rule of that particular trading strategy. Okay? And the thing is, most traders, especially those who are struggling to become profitable, are not that disciplined. And so what usually happens is that they will take trades that trading strategy signals, and when that trade ends up being a winning trade, they either get so excited and so happy that they found the holy grail, and then they start trading based on greed. So instead of risking 1% of their account's capital on each trade they take, for example, they double up or triple up or even bet the farm and risk like 50% of their account's capital, because they believe they found the holy grail, and so they want to double their amount, their capital within the blink of an eye, for example. Okay? And if that particular trade that they were betting everything on didn't go as expected, then they would end up losing a huge chunk of their trading capital. Now, does this mean that trading strategy doesn't work? Obviously not. But the thing is, there's a discrepancy between how the trading strategy performed and what you actually ended up doing in the market. If you followed the trading strategy as you were supposed to follow it and you tracked it, then you would have seen that, okay, if everything, all things being equal, for example, okay, if I did everything the trading strategy said I should do, and at the end of the day, I didn't revenge trade, I didn't get greedy, I didn't do anything, but I still lost money, then that's not on me, because that's just how the market is. And so maybe the market conditions were not favorable. But let's say you broke the rules of the trading strategy. When the strategy told you to risk 1%, you ended up risking much more than that, or much less than that, because you were scared after getting into a losing streak, or whatever the case might be, for example. Okay? Now, if at the end of that particular sample size, all things being equal, let's say you would have been in a loss or you would have been in a profit, depending on the performance of the strategy, but because you didn't follow the rules of the strategy to the T, you ended up not being profitable, then guess what? The problem is not with the strategy, it's with you. And that's one of the reasons why tracking is so important, because if you're tracking your trading performance, especially making end-of-year reviews and all of that, if you have a trading coach or an accountability partner, this will help you to be able to speak with that coach or that accountability partner and see exactly where the problem is. Is it that you followed every single rule of that trading strategy exactly how you're supposed to, and you still ended up not being profitable? If that was the case, then the problem is not with you. It's just market conditions not favoring your trading strategy, and that happens. That is a normal thing in the markets. But if the problem is you were not profitable because you didn't follow the rules of the trading strategy, which if you were tracking, you would have seen that if you had followed the rules of the trading strategy exactly how you were supposed to, you would have ended up being profitable. But because you were not disciplined, you did opposite of that particular thing you're supposed to do, and then you ended up losing money. Guess what? The problem is not the strategy. The problem is with you. And the only way you can know this is if you are tracking the trades you take, saving screenshots, tracking the numbers with journal softwares that are free, by the way, like my FX book, or all of those countless trading journals out there. And then you're tracking all these numbers, and then you're reviewing your performance and seeing everything. That's the only way you can improve. Again, you cannot improve what you don't measure. You have to inculcate this. If this past year that just went by, that, we just have a couple of days to end, okay? If you've not been tracking your performance the way you're supposed to, then guess what? You still have time. We're just getting into the new year, and hopefully, God willing, we see the end of this new year that we're getting into. And so you need to make a resolution right now that, okay, I'm going to find a trading strategy that works. Then I'm going to backtest that trading strategy, for example, to prove that it worked in the past. Again, I make this disclaimer because in the financial markets, this is just how things are, okay? Just because a trading strategy worked in the past, that does not mean that or guarantee that it's going to work in the future. But if you're using something that's worked in the past, after taking, a large number of trades, there's a high chance, there's a high probability that the conditions that favored that trading strategy to perform good in the past is likely going to manifest itself again in the future. And so if it does do that, we're capitalizing on that and positioning ourselves in such a way that we'll take advantage of that. And that's one of the biggest arguments for backtesting. Okay? So find a trading strategy that works. Create one from scratch or find one from YouTube or Google. Do whatever it takes to find one. We even have countless trading strategies that I've taught you guys on this channel that actually do work. Okay, find one that resonates with your trading style. If you're a trader who likes trading with market structure alone without indicators and nothing else, then find one that works with what you're comfortable with, and then develop it. And once you've done that, backtest that trading strategy to prove that it works. Once you've backtested it, you've tested it, and you've proven that it works, trade with it on live account, not with borrowed money or hundreds of thousands of dollars that you cannot afford to lose. No. Trade it on a live account. Ideally, trade it on a cent account, which is a nano account that would reflect each dollar in the account as 100 cents. Okay, so trade it on that type of account with money you can afford to lose, very small money, because the reason for that stage of the development process is not for you to make money. Okay, is to see whether the trading strategy that you've backtested and foretested in a simulation market environment, whether it can perform well in live market conditions, under live market conditions. That's just the purpose of live testing on a small account. So once you've proven that that is the case, so it has performed well, it was profitable in backtesting, it was profitable in forward testing, and then you tested that trading strategy on a live account, small live account with maybe $50 or $100, money you can afford to lose. Okay, you know that for yourself better than anyone else. Okay, so if you've backtested it, forward tested it, and live tested it, and you've proven that it works, then you are now going to go to the stage where you're going to deploy that trading strategy onto the live markets. And that deployment stage is going to depend on what your goals are. Even though I always teach my students and advise my clients to not go for monetary goals when they're trading. For example, let's say you just got into trading, and when I tell you to set a goal, for example, because you're new to it, you don't know any better, okay? You decide you want to make X amount of thousands of dollars per month, each and every month, for example. And obviously, that's not how trading works, because unlike a regular salary job that you're employed by an employer, for example, where your income or your salary is fixed each and every month, trading, the income from trading fluctuates. There are months where you're going to make tremendous amounts of profits, return on investment, and there are months where you're going to struggle to break even, and there are months that are just going to be losing months. Okay, not because you did anything wrong, but just because market conditions were not favoring what you're actually using to trade the markets. Okay, so let's assume you've already made your back test, your forward test, and your live test, and you've proven that your trading strategy is profitable. Now, the deployment stage is where I kind of advise traders to make a goal of taking, for example, let's say you took 100 trades in your back test and you found out that your trading strategy was profitable for that 100 trades. You did 50 trades in your forward test, it was still profitable. You did something like 25 trades in your live test and it was still profitable. Okay, now you would set a goal of saying, okay, I'm going to take 100 trades in my live trading now. But even though I'm going to take 100 trades, and even though I tell you guys to not aim for monetary goals, what you would do that would make that particular goal that you're setting to take 100 trades with the trading strategy that you've tested, what you do to make it worthwhile for you is to crunch the numbers from your back test, forward test, and live testing data to see what the average number, the average return on investment your trading strategy gives you on a month-to-month basis, even though you know that some months are going to be winning and losing months. That's why I'm saying the average number here, okay? So you'd crunch the numbers and see what the average number is. So if, for example, your trading strategy, your tested trading strategy gives you an average of 1% return on investment per month, and your goal, apart from taking 100 trades with your trading strategy that you've proven that it works, the monetary aspect of the goal is that you are aiming to make $10,000 a month, for example, then you need, at least for you to hit that $10,000 per month number on average, you would need to trade an account where where 1% of that particular account, okay, is going 1% of the account size is going to be $10,000. And in that case, we're talking about trading an account that is like, let's say, $1 million account. So if you have $1 million, awesome. It's great to be you, because you don't have much problem with that kind of money. You just fund a couple of 100,000 or whatever the case might be with a broker and trade. And then hopefully your trading strategy continues to perform well in the market and you make that profit. And obviously, that's it. You just continue doing what you do that worked, rinse and repeat. But if you don't have that type of capital, then you're going to have to devise a means to raise that capital. Some might decide to go with private investors, and some might decide to go with prop firms, online prop firms. If that's the case for you, choose whatever path you want to go to and use it. Then use the trading strategy that you've worked out, that it works for you, and then deploy that particular strategy to that capital. Okay, so anyways, this is all that it boils down to. You are not just going to set a goal to take a number of trades, for example. You're going to set a goal to take a number of trades with using a trading strategy that you've tested and you've proven that it works. Okay, and then not only are you just going to take those trades blindly, you take those trades and journal them properly. Save screenshots, your entries, your exits, the price level that you entered at when you got out, every single thing, your before screenshot, your after screenshot. The reason why you're taking all of this data is because at the end of the day, you want to be reviewing your trading performance to see the discrepancy between your trading strategy's performance and your own performance as well. If, for example, it so happens that every single trade that your trading strategy said you should take, you took it following the rules of the trading strategy. But at the end of the sample size, let's say your sample size was like 15 or 30 trades, for example. At the end of that particular sample size, you ended up not making any profit. In fact, you ended up with a loss. If you took every single trade your trading strategy said you should take with the rules that risk management and money management or trade management rules respected to the T, okay, and you still lost that money, you know what? Clap for yourself, because you didn't do anything wrong. The strategy, it was just traded in a time where the market conditions were not favoring it. And so clap for yourself, because you were trading with discipline, and that's what you're supposed to do. But let's say the icing on the cake is you followed the rules of your trading strategy, did every single thing he said you should do, and you ended up at the end of that sample size of trades still being profitable. That's awesome, because that is what we want. That is what we want. The problem is when you follow the rules of your trading strategy without discipline. And so you take one trade and it turns out to be a losing trade. You take the next one, it also turns out to be a losing trade. You take the third one and it turns out to be a losing trade. So you've had 3 back-to-back losses. But then when you go back to the data from your back test, you see that having 3, 4, 5, 6 losing trades in a row is a normal thing for your trading strategy. But then you did not act that way, because when you got this couple of trades in a row, losses, these consecutive losses, you started freaking out because you were trading with money you couldn't afford to lose. Maybe your house rent, maybe money you borrowed from your colleagues, or whatever the case might be. And so now you wanted to recover what you lost, as soon as possible. And so you started revenge trading, risking more than you should, or getting greedy, all of those things, okay? At the end of the day, with that type of mindset, your trading strategy would have been profitable on paper, but because you didn't follow it to the T, you didn't do what you're supposed to do, then there might end up being a discrepancy between your performance and the results that your trading strategy would have given you, would have provided for you. And the only way you can know that is if you are properly documenting the trades you take, and you're properly taking the time to review your performance, your trading performance, okay? Analyzing all of these things. If you don't do all this hard work, or let's say much needed work, because this is what the pros do, okay? This is the bare minimum that is expected of you. If you really can't take time to do all of these things, then trading might not just be for you, okay? Because you really need to do this due diligence, okay? To make sure everything, it's just like running a business and you don't want to do any of the bookkeeping or all of those things. You might struggle to know where that business is bleeding money and where it is making you money that you are not even capitalizing to its fullest. So it's just the same thing in trading. You need to know your numbers. You need to know your strategy inside out. You need to know how your discipline is with respect to following the trading strategies rules and all of those things. Okay? So please, please, please take time to backtest your trading strategy. Forward test it, live test it. If it's profitable, good. If it's not, go and look for another one. Keep doing this until you find something that works. And once you found something that works, then deploy it to the live markets, but in such a way that will help you to hit your monetary goals. So your goal, your hardcore goal should be, okay, I want to take 100 trades using this trading strategy that I've proven that it works. Okay, because we want to shift our focus from being, I want to make X amount of money, to a process-oriented goal, because that's what trading is all about at the end of the day. But you do that in such a way that if you were to hit your process-oriented goal, it would still it would still align with your monetary goals. So if you've seen that your trading strategy on average gives you a return on investment of 1% per month, and you want that 1% to be a figure that will help you to, quit your job, and that 1% figure just happens to be like $10,000, then obviously you know that if you're trading a $10,000 account and your trading strategy, the best it did during the backtest or testing phase, backtest, forward test, and live test, the best it did was 1% per month on average, then obviously you know that 1% of $10,000 is going to be $100. Now, is $100 what you're trying to aim to live off of? If that's the case, then a $10,000 trading account is all you need. But if that's not the case, and you want to make, let's say, $1,000 per month on average, for example, then you know that you would need at least a $100,000 account, because that's what is going to comfortably give you the monetary goal that you're seeking for, with regards to how your trading strategy performs, or how it performed in the past, and how we are hoping it will continue to perform in the future. Okay, so this is important, and that's why please take the time to test your trading strategy. And once you've done that, this is the end of the year. If you haven't been reviewing your performance for the past year, take the time to create your trading strategy, and then now that we're getting into the new year, create a trading plan. Make a goal of taking X number of trades, ideally 100 trades, for example, with a trading strategy that you've tested. So you've backtested, taken at least like 100 to 200 trades with it, and you've seen that it's profitable. Then you tested it with data that is not apart from the data that you backtested it with, completely different, so that you know that the results you got were not just a lucky fluke. It wasn't confuted or anything like that. And then you live test it to see how it performs in real under live market conditions, in real market situations. And then if it passes all of these phases and it's still profitable, then you deploy that strategy to the live market. And once you've done that, you're good to go. You just work out the numbers and hopefully try to trade with an account size that will help you to hit your monetary goals, in order to hit your trading goals, whatever you go into trading for in the first place. So this pretty much brings us to the end of this week's edition of the class. But as usual, before we wrap up the class, I would like to use this opportunity to let you guys know about the ITU suite of bots that we offer. These are expert advisors, or trading robots as they're also commonly called, which are designed to look for low risk, high probability trading opportunities on your behalf. So they would look for low risk, high probability trading opportunities based on proven market concepts that work. And then if you follow our risk recommendations, they would place those trades for you with proper risk management, with least exposure that is designed to protect your account and get you up and running as soon as possible. Get you earning while you're learning how to trade. Okay, so you can decide to invest a portion of your portfolio, okay, to the automated trading, while you also learn how to trade manually if you are so interested in it, using the ITU Forex classes and all of the tips and tricks that we provide for you in these lectures, okay? So if you're interested in that, please reach out to us on the socials or any of our social handles, or you could drop a comment or a question in the comment section of this video, and we'll be more than happy to assist you set everything up in a step-by-step manner. In the meantime, I sincerely thank you guys for taking the time to, watch these classes, to attend these classes, and being as interactive as you are with all of this content that we're pumping out. trying to help you guys to become consistently profitable traders. I sincerely appreciate it, and I look forward to seeing you guys in next week's edition of the ITU Forex class. In the meantime, please make sure that you take the advice in this class, okay? Go out there, find the trading strategy that works for you. We have countless videos about trading strategies on the channel, which you could watch and, try to improve your trading performance with. Find one that resonates with you. If you're interested in one, find one that resonates with your trading personality and then test it. Again, remember the sequence. You backtest it using historical data, in-sample historical data. Then you would forward test it with out-of-sample historical data. That is data that you didn't use in your backtest. That is completely different to the time range in your backtest. So that if it ends up being profitable again, then you know that it wasn't just a fluke, that the strategy was profitable during your backtest. And so once you've done all of this, you would like to see how it performs under live market conditions. Okay, because maybe during your simulation, your backtest and your forward test, you are trading with ideal market conditions, maybe minimal commission, minimal spreads, and all of that. So make sure you trade it in a live environment to prove once again, that the trading strategy is profitable. If you've done all of these testing phases and it's still profitable, then you deploy it to an account with an account capital that would help you to reach your monetary goals. But we don't just set a goal of saying we want to make X amount of money per month. We do it in such a way that our goal is process oriented. So we'll be like, I want to take 100 trades using my trading strategy that I've tested and I've proven that it works. But for me to be able to reach my monetary goal of quitting my job by making $1,000 per month extra, okay, on average, then I need to trade with that $100,000 account. And so if you have $100,000 lying around, you can fund an account and just trade with your trading strategy that you've proven that it works. But if you don't have that, then you know that, okay, now the problem is for me to source capital. And to do that, you trade in a way that would help you gain that capital. Maybe private investors, maybe online platforms, or whatever the case might be. Okay, so once again, thank you very much, guys, and I look forward to seeing you guys in next week's edition of the class. May God bless you all and help you to improve and become better traders. Okay, once again, thank you and God bless you. Enjoy the rest of your weekend.